Question 1. The investigation demonstrates that a significant discrepancy has been identified in the invoicing from a key supplier to fresh Del Monte produce, potentially impacting reported revenue. You are the manager responsible for overseeing this supplier relationship. What is the most appropriate course of action? Option A. Attempt to resolve the invoicing issue directly with the supplier to avoid involving internal departments. Option B. Overlook the discrepancy, assuming it is a minor administrative error that will likely be corrected by the supplier. Option C. Adjust the internal records to align with the supplier's invoices without further inquiry. Option D. Immediately report the discrepancy to Fresh Del Monte Produce's compliance department and cooperate fully with their investigation. Correct answer is D. Immediately report the discrepancy to Fresh Del Monte Produce's compliance department and cooperate fully with their investigation. Explanation. This scenario presents a professional challenge because it requires balancing the company's immediate financial interests with its long-term ethical obligations and regulatory compliance. The pressure to meet targets can create an environment where shortcuts are considered, but adherence to ethical principles and regulatory frameworks is paramount. Careful judgment is required to identify and address potential conflicts of interest and ensure that all actions are transparent and justifiable. The correct approach involves immediately reporting the observed discrepancy to the appropriate internal channels, such as the compliance department or legal counsel, and cooperating fully with any subsequent investigation. This demonstrates a commitment to ethical conduct and regulatory adherence, prioritizing integrity over short-term gains. This approach aligns with the principles of corporate governance and the duty of employees to act in the best interests of the company and its stakeholders, as often stipulated in company codes of conduct and regulatory guidelines that emphasize transparency and accountability. An incorrect approach would be to ignore the discrepancy, assuming it is a minor oversight or hoping it will resolve itself. This failure to report a potential issue violates the duty of care and could expose Fresh Del Monte Produce to significant legal and reputational damage if the discrepancy is indeed a result of misconduct or a material misstatement. Another incorrect approach would be to attempt to rectify the discrepancy independently without proper authorization or consultation. This could lead to further inaccuracies, mask underlying problems, and potentially violate internal control procedures and accounting regulations, demonstrating a lack of respect for established processes and oversight. Finally, confronting the supplier directly without involving internal compliance or legal teams could escalate the situation unnecessarily, potentially jeopardizing the company's negotiating position or leading to premature accusations without a thorough understanding of the facts. Professionals should employ a decision-making framework that prioritizes ethical considerations and regulatory compliance. This involves 1. Identifying the ethical and regulatory implications of the situation. 2. Consulting relevant company policies, codes of conduct, and applicable regulations. 3. Seeking guidance from appropriate internal departments, e.g., compliance, legal, internal audit. 4. Documenting all observations and actions taken. 5. Acting with integrity and transparency throughout the process. Question 2. The analysis reveals that a shipment of fresh Del Monte Produce bananas destined for a key European market has a minor, but potentially reportable, deviation from the agreed-upon quality specifications due to an unexpected weather event during transit. The deviation does not immediately pose a health risk, but could lead to a higher-than-usual rate of spoilage once it reaches the distribution centers, potentially impacting consumer satisfaction and leading to customer complaints. The sales team is pushing to expedite the shipment to meet contractual delivery dates and avoid penalties, while the quality assurance team has flagged the issue. What is the most ethically and regulatorily sound course of action for the Fresh Del Monte Produce operations manager? Option A. Expedite the shipment as requested by the sales team, with instructions to the distribution centers to manage the spoilage rate as best as possible and address any complaints reactively. Option B. Immediately halt the shipment. Conduct a thorough investigation into the extent of the quality deviation, and proactively report the findings and potential risks to the relevant European food safety authorities and the importing distributor, regardless of the immediate impact on delivery schedules and potential penalties. Option C. Delay the shipment for a few days to allow for a superficial reinspection, and if no significant issues are found during this brief check, then proceed with the shipment without further reporting. Option D. Proceed with the shipment, but instruct the quality control team to relabel the produce with a slightly different grade that is still within acceptable parameters, thereby avoiding the need for formal reporting. Correct answer is A. Expedite the shipment as requested by the sales team, with instructions to the distribution centers to manage the spoilage rate as best as possible and address any complaints reactively. Explanation. This scenario presents a professional challenge because it requires balancing the company's immediate financial interests with its long-term ethical obligations and regulatory compliance. The pressure to meet targets can create a temptation to overlook or downplay potential issues, making objective judgment crucial. The correct approach involves proactively and transparently reporting the potential quality issue to senior management and the relevant regulatory bodies, even if it means delaying a shipment and incurring potential financial penalties. This aligns with the ethical principle of integrity and the regulatory requirement for companies to disclose material information that could impact product safety or consumer health. Fresh Del Monte Produce, as a publicly traded company, has a duty to its shareholders and the public to operate with transparency and to uphold product quality standards. Adhering to these principles safeguards the company's reputation and avoids more severe consequences, such as fines, lawsuits, or product recalls, that could arise from a delayed or incomplete disclosure. An incorrect approach would be to attempt to conceal or minimize the quality issue to avoid immediate financial repercussions. This could involve instructing the quality control team to overlook the discrepancy or to reclassify the affected produce in a way that avoids triggering mandatory reporting. Such actions would violate ethical standards of honesty and transparency and potentially contravene regulations that mandate reporting of product defects or safety concerns. Another incorrect approach would be to delay reporting until the issue is undeniable or discovered by external parties. This demonstrates a lack of proactive responsibility and could be interpreted as an attempt to mislead regulators and consumers, leading to severe penalties and reputational damage. Professionals facing similar situations should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves 1. Identifying the core ethical and regulatory obligations. 2. Assessing the potential impact of the issue on consumers, the company, and stakeholders. 3. Consulting relevant internal policies and external regulations. 4. Seeking guidance from legal and compliance departments. 5. Acting with transparency and integrity, even when it presents short-term challenges. The ultimate goal is to make decisions that uphold the company's values and legal responsibilities, fostering trust and long-term sustainability. Question 3. The assessment process reveals that a candidate for a position at Fresh Del Monte Produce has personal ethical reservations about a specific aspect of the role as described in the job description. The candidate is otherwise highly qualified and enthusiastic about the opportunity. What is the most ethically sound and professionally responsible course of action for the candidate to take? Option A. Misrepresent their willingness to perform all aspects of the role as described, with the intention of addressing the issue if it arises later. Option B. Withdraw from the assessment process immediately without providing any specific reason for their withdrawal. Option C. Proactively and honestly communicate their ethical reservations to the hiring manager or HR representative to discuss potential implications and explore solutions. Option D. Remain silent about their reservations during the assessment process and hope the issue does not become a significant part of the role. The correct answer is C. Proactively and honestly communicate their ethical reservations to the hiring manager or HR representative to discuss potential implications and explore solutions. Explanation. This scenario presents a professional challenge because it involves a conflict between a candidate's personal ethical beliefs and the potential requirements of a role at Fresh Del Monte Produce. The candidate must navigate this situation without compromising their integrity or misrepresenting their capabilities, while also adhering to the principles of fair hiring practices. Careful judgment is required to determine the most appropriate course of action that respects both personal values and professional obligations. The correct approach involves the candidate proactively and honestly communicating their concerns about the potential conflict to the hiring manager or HR representative. This demonstrates integrity, transparency, and a commitment to ethical conduct. By raising the issue early, The candidate allows fresh Del Monte produce to assess whether accommodations can be made, or if the role is truly a mismatch, thereby fostering an open and honest dialogue. This aligns with general ethical principles of honesty and integrity in professional dealings, and implicitly supports the spirit of fair employment practices by ensuring a mutual understanding of expectations and potential limitations. An incorrect approach would be to remain silent and hope the issue does not arise, or to misrepresent their willingness to perform certain tasks. Remaining silent risks a future situation where the candidate is unable to fulfill job duties due to their ethical stance, potentially leading to disciplinary action or termination, and a breach of trust. Misrepresenting their willingness to perform tasks constitutes dishonesty, which is a fundamental ethical failure and a violation of professional conduct. Another incorrect approach would be to withdraw from the assessment process without explanation. While this avoids direct confrontation, it misses an opportunity for open communication and may be perceived as an unwillingness to engage constructively with potential employers. Professionals should approach such situations by first identifying the core ethical conflict. They should then consider the principles of honesty, transparency, and professional responsibility. The decision-making process involves evaluating potential outcomes of different actions, prioritizing ethical conduct, and seeking to resolve the conflict through open communication and a willingness to understand the employer's perspective and requirements. If a genuine and unresolvable conflict exists, it is more professional to address it proactively rather than allowing it to surface later. Question 4. To address the challenge of a potential conflict of interest, an employee at Fresh Del Monte Produce discovers that a close personal friend is a representative of a key supplier being considered for a significant contract. The employee is involved in the evaluation and selection process for this contract. What is the most ethically and professionally responsible course of action for the employee to take? Option A. Immediately disclose the personal relationship to their direct manager and the relevant ethics or compliance department, and recuse themselves from all aspects of the supplier evaluation and selection process. Option B. Inform their friend about the evaluation process and encourage them to present the best possible proposal while still participating in the selection process themselves. Option C. Proceed with the evaluation and selection process, ensuring they remain objective and make the decision based solely on the supplier's merits, without mentioning the personal relationship. Option D. Subtly advocate for the friend's company during the evaluation process, believing their personal connection will not influence their judgment and could even lead to a better outcome for Fresh Del Monte Produce. The correct answer is A. Immediately disclose the personal relationship to their direct manager and the relevant ethics or compliance department, and recuse themselves from all aspects of the supplier evaluation and selection process. Explanation. This scenario presents a professional challenge because it requires an employee of Fresh Del Monte Produce to navigate a situation where a personal relationship could potentially influence business decisions, creating a conflict of interest. The core of the challenge lies in maintaining objectivity and upholding the company's ethical standards and regulatory compliance, even when personal connections are involved. Careful judgment is required to ensure that all decisions are made in the best interest of Fresh Del Monte Produce and its stakeholders, free from undue personal influence. The correct approach involves transparently disclosing the personal relationship to the appropriate authority within Fresh Del Monte Produce, and recusing oneself from any decision-making processes directly related to the supplier. This upholds the principle of avoiding conflicts of interest, which is a cornerstone of ethical business conduct, and is often mandated by company policies and regulatory frameworks designed to ensure fair dealing and prevent favoritism. By disclosing and recusing, the employee demonstrates integrity and commitment to the company's best interests, thereby safeguarding against potential breaches of trust and regulatory noncompliance. An incorrect approach of proceeding with the supplier selection without disclosure and recusal would be professionally unacceptable. This failure to disclose a potential conflict of interest violates fundamental ethical obligations and likely breaches internal company policies designed to prevent such situations. It creates an appearance of impropriety, even if no actual wrongdoing occurred, and could lead to decisions that are not based on merit but on personal bias, potentially harming Fresh Del Monte Produce financially or reputationally. Furthermore, depending on the specific industry regulations applicable to Fresh Del Monte Produce, Such a failure could also constitute a regulatory violation, leading to penalties or sanctions. Another incorrect approach, that of subtly favoring the supplier due to the personal relationship without explicit disclosure or recusal, is equally problematic. This constitutes a covert conflict of interest and undermines the integrity of the procurement process. It is a breach of trust and professional duty, as it prioritizes personal connections over objective evaluation of the supplier's suitability. This can lead to suboptimal business outcomes for fresh Del Monte produce and can erode confidence among other employees and stakeholders. A professional decision-making process for similar situations should involve a clear framework. 1. Identify potential conflicts of interest. Recognize any situation where personal interests could interfere with professional duties. 2. Consult company policy. Review Fresh Del Monte Produce's Code of Conduct and Conflict of Interest policies. 3. Disclose transparently. Report the potential conflict to the designated supervisor or ethics officer. 4. Seek guidance. Obtain clear instructions on how to proceed, which may include recusal. 5. Act with integrity. Adhere strictly to the guidance provided and prioritize the company's best interests. Question 5. The review process indicates that a fresh Del Monte Produce procurement manager is responsible for selecting a vendor for a significant supply contract. The manager's sibling recently acquired a substantial ownership stake in one of the bidding companies. The manager is aware of this familial connection and the potential for it to influence their decision-making. What is the most appropriate course of action for the procurement manager? Option A. Immediately disclose the familial relationship and the siblings' ownership stake to their direct supervisor and the company's compliance department, and recuse themselves from the vendor selection process. Option B. Inform their sibling about the bidding process and encourage them to ensure their company submits the most competitive offer. Option C. Proceed with the vendor selection process, trusting their professional judgment to remain impartial and make the best decision for fresh Del Monte produce. Option D. Keep the familial relationship confidential and make the decision based on the merits of the bids, believing that transparency is not necessary in this instance. The correct answer is A. Immediately disclose the familial relationship and the siblings' ownership stake to their direct supervisor and the company's compliance department, and recuse themselves from the vendor selection process. Explanation. The review process indicates a potential conflict of interest scenario at fresh Del Monte Produce. This situation is professionally challenging because it requires balancing business objectives with ethical obligations and regulatory compliance. The core of the challenge lies in identifying and managing situations where personal interests could improperly influence professional judgment or actions. Careful judgment is required to ensure that decisions made by employees are always in the best interest of fresh Del Monte Produce and its stakeholders, and not for personal gain. The correct approach involves promptly and transparently disclosing the potential conflict of interest to the appropriate authority within fresh Del Monte Produce, such as the compliance department or a designated manager. This allows the company to assess the situation, implement mitigation strategies, or recuse the individual from relevant decision-making processes. This approach aligns with fundamental ethical principles of honesty and integrity, and is often mandated by company policies and regulatory frameworks designed to prevent fraud, corruption, and unfair business practices. For example, many corporate codes of conduct and securities regulations require disclosure of such conflicts to maintain market integrity and investor confidence. An incorrect approach would be to ignore the situation or attempt to resolve it independently without disclosure. This failure to disclose a potential conflict of interest violates ethical duties of loyalty and transparency owed to the employer. It can lead to decisions that are not in the company's best interest, potentially resulting in financial losses, reputational damage, and legal liabilities for both the individual and fresh Del Monte Produce. Furthermore, such an action can be construed as an attempt to conceal impropriety, which is a serious ethical and potentially legal breach. Another incorrect approach is to proceed with the decision or action while believing personal integrity is sufficient to prevent bias. While personal integrity is important, it does not negate the appearance or reality of a conflict of interest. The regulatory and ethical frameworks are designed to address not only actual bias, but also the perception of bias, which can erode trust and create an uneven playing field. Relying solely on personal judgment, without formal disclosure and management of the conflict, is insufficient and risky. A professional decision-making process for similar situations should involve a clear understanding of the company's code of conduct and conflict of interest policies. When faced with a situation that might present a conflict, an individual should 1. Identify the potential conflict. 2. Consult relevant company policies and procedures. 3. Disclose the situation promptly and fully to the designated authority. 4. Cooperate with the company's review and follow their guidance. This systematic approach ensures that potential conflicts are managed proactively and ethically, safeguarding both the individual's professional standing and the company's interests. Question 6. What factors determine the appropriate course of action for a fresh Del Monte Produce procurement manager when a close personal friend's company submits a bid for a significant contract? Option A. The likelihood of the personal relationship being discovered by other employees. Option B. The personal relationship with the bidder and the potential for bias influencing the procurement decision. Option C. The urgency of the procurement and the potential impact on fresh Del Monte Produce's operations. Option D. The perceived quality of the friend's company's bid compared to others. The correct answer is B. The personal relationship with the bidder and the potential for bias influencing the procurement decision. Explanation. This scenario presents a professional challenge for an employee at fresh Del Monte Produce due to the potential conflict between personal relationships and professional integrity, particularly when dealing with procurement decisions. The need for careful judgment arises from the obligation to act in the best interest of the company while upholding ethical standards and adhering to company policy. The correct approach involves transparently disclosing the personal relationship to the appropriate authority within fresh Del Monte Produce and recusing oneself from any decision-making process that could be influenced by this relationship. This aligns with fundamental ethical principles of avoiding conflicts of interest and maintaining impartiality in business dealings. Specifically, it adheres to common corporate governance guidelines and ethical codes that mandate disclosure and recusal to prevent favoritism, ensure fair competition among suppliers, and protect the company from potential reputational damage or financial impropriety. This proactive disclosure and recusal demonstrate a commitment to integrity and good corporate citizenship. An incorrect approach would be to proceed with the procurement decision without disclosing the personal relationship. This failure constitutes a breach of ethical conduct by creating a situation where personal bias could improperly influence a business decision, potentially leading to the selection of a supplier based on personal ties rather than merit, quality, or price. This could violate company policies designed to prevent conflicts of interest and could expose fresh Del Monte Produce to risks of unfair dealing and potential legal or regulatory scrutiny if such practices were discovered. Another incorrect approach would be to subtly favor the acquaintance's company without explicit disclosure, perhaps by overlooking minor deficiencies or offering preferential terms. This is ethically unsound as it still involves a conflict of interest, albeit one that is not openly acknowledged. It undermines the principles of fair procurement and can lead to suboptimal business outcomes for fresh Del Monte Produce, such as paying more for lower quality goods or services. It also erodes trust within the organization and with other suppliers. Finally, an incorrect approach would be to ignore the personal relationship and assume objectivity is guaranteed. This is a dangerous assumption that disregards the inherent human tendency towards bias. Professional ethics require active management of potential conflicts, not passive reliance on personal integrity alone. Failing to acknowledge and manage this potential conflict leaves the employee and the company vulnerable to accusations of impropriety and can lead to decisions that are not in the company's best interest. The professional reasoning framework for such situations involves a proactive assessment of potential conflicts of interest. Employees should be aware of their company's code of conduct and policies regarding conflicts of interest. When a potential conflict arises, the immediate steps should be to identify the nature of the relationship, assess its potential impact on professional duties, and consult company policy or a supervisor/ethics officer for guidance. Transparency, disclosure, and recusal are key pillars of ethical decision-making in these circumstances. Question 7. The assessment process reveals that a candidate for a role at fresh Del Monte Produce has learned of a personal investment opportunity in a company that is currently a supplier being evaluated by fresh Del Monte for a significant contract. The candidate has not yet acted on this investment opportunity. What is the most ethically and professionally responsible course of action for the candidate to take? Option A. Immediately disclose the potential conflict of interest to their direct supervisor and the relevant compliance or legal department at Fresh Del Monte Produce. Option B. Discuss the investment opportunity with trusted colleagues at Fresh Del Monte Produce to gauge their opinions before deciding on a course of action. Option C. Ignore the situation and hope that the supplier evaluation process concludes without any issues related to this potential conflict. Option D. Pursue the investment opportunity discreetly, assuming their personal financial interests will not influence their professional judgment. The correct answer is A. Immediately disclose the potential conflict of interest to their direct supervisor and the relevant compliance or legal department at Fresh Del Monte Produce. Explanation. Scenario analysis. This scenario presents a conflict between a candidate's personal financial interests and their professional obligations to Fresh Del Monte Produce. The candidate has discovered a potential financial gain through a third-party investment opportunity that is directly related to a supplier the company is currently evaluating. This creates a significant ethical dilemma due to the potential for insider information and the appearance of impropriety, even if no explicit wrongdoing is intended. The challenge lies in navigating this situation transparently and ethically, ensuring that Fresh Del Monte's interests are protected and that the candidate upholds their duty of loyalty and integrity. Correct approach analysis. The correct approach involves immediately disclosing the situation to their direct supervisor and the relevant compliance or legal department at Fresh Del Monte Produce. This demonstrates a commitment to transparency, ethical conduct, and adherence to company policy and regulatory expectations. By proactively informing the company, the candidate allows Fresh Del Monte to assess the situation, manage any potential conflicts of interest, and ensure that the supplier evaluation process remains fair and unbiased. This aligns with principles of good corporate governance and the duty of a fiduciary to act in the best interests of the employer. Incorrect approaches analysis. Pursuing the investment without disclosure is ethically and regulatorily unsound. It creates a direct conflict of interest, as the candidate's personal financial gain could influence their judgment or actions concerning the supplier evaluation. This behavior could be construed as a breach of trust and potentially violate internal company policies regarding conflicts of interest and insider trading, even if no explicit insider information is used. Discussing the investment opportunity with colleagues at Fresh Del Monte Produce before informing management is also problematic. While seemingly less direct than pursuing the investment, it still risks creating an environment where confidential information about the supplier evaluation could be inadvertently shared or where perceptions of impropriety arise. It bypasses the proper channels for addressing conflicts of interest and can undermine the integrity of internal processes. Ignoring the situation and hoping it resolves itself is a passive approach that fails to address the inherent ethical conflict. It leaves the potential for a conflict of interest to fester and could lead to serious repercussions if discovered later. This inaction demonstrates a lack of professional responsibility and a disregard for the company's ethical standards and potential regulatory exposure. Professional reasoning. Professionals facing such dilemmas should adopt a proactive and transparent approach. The decision-making framework involves 1. Identifying the potential conflict of interest. 2. Consulting company policies and relevant codes of conduct. 3. Seeking guidance from supervisors or compliance departments. 4. Documenting all communications and decisions. The paramount principle is to prioritize the employer's interests and maintain the highest ethical standards, thereby safeguarding both personal reputation and the company's integrity. Question 8. Compliance review shows that a senior executive at Fresh Del Monte Produce has requested access to non-public sales projections for a specific region, stating it is crucial for an upcoming strategic discussion with a potential investor. You are aware that these projections are not yet finalized and are subject to significant revision. What is the most appropriate course of action? Option A. Politely decline the request, stating that you are not authorized to share such information. Option B. Escalate the request to the Fresh Del Monte Produce Compliance Department for guidance on how to proceed, citing the non-public and unfinalized nature of the information. Option C. Inform the senior executive that you will provide the projections once they are finalized and officially approved by the relevant department. Option D. Directly provide the senior executive with the current, unfinalized sales projections as requested, emphasizing their preliminary nature. The correct answer is C. Inform the senior executive that you will provide the projections once they are finalized and officially approved by the relevant department. Explanation. This scenario presents a professional challenge because it requires balancing a direct request from senior management with the company's ethical obligations and regulatory compliance. The pressure to meet targets can create an environment where shortcuts are considered, but maintaining integrity and adhering to established guidelines is paramount. Careful judgment is needed to identify potential conflicts of interest and ensure that all actions align with Fresh Del Monte Produce's commitment to ethical conduct and relevant regulations. The correct approach involves escalating the situation to the compliance department. This is the most professionally sound and ethically responsible action because it acknowledges the potential conflict and seeks guidance from the designated authority responsible for interpreting and enforcing compliance policies. Fresh Del Monte Produce, like any responsible corporation, operates under a framework of internal policies and external regulations designed to prevent unethical practices and ensure fair dealings. By involving the compliance department, the employee ensures that the situation is reviewed objectively, potential violations are identified, and appropriate corrective actions are taken in accordance with established procedures and legal requirements. This upholds the company's integrity and protects it from potential legal and reputational damage. An incorrect approach would be to directly fulfill the request without further inquiry. This fails to recognize the potential ethical implications and regulatory risks associated with providing preferential treatment or information that could be construed as insider trading or market manipulation, depending on the specific nature of the information. It bypasses established compliance protocols and could lead to serious violations of securities laws and company policy. Another incorrect approach would be to ignore the request and take no action. While this avoids direct complicity, it also fails to address a potentially problematic situation that could still reflect poorly on the company if it becomes known that such requests were made and not handled appropriately. It also misses an opportunity to reinforce compliance culture within the organization. Finally, attempting to subtly steer the conversation away from the specific request without formal escalation is also an inadequate response. This approach lacks transparency and does not provide the necessary oversight or documentation that a formal compliance review would offer. It leaves the situation ambiguous and does not guarantee that the underlying issue is resolved in a manner that fully protects Fresh Del Monte Produce and its stakeholders. Professionals should employ a decision-making framework that prioritizes ethical conduct and regulatory adherence. This involves 1. Identifying potential ethical or regulatory conflicts. 2. Consulting relevant company policies and codes of conduct. 3. Escalating concerns to the appropriate internal authority, such as the compliance department or legal counsel, when in doubt or when a conflict is identified. 4. Documenting all communications and actions taken. 5. Acting with integrity and transparency at all times. Question 9. Process analysis reveals that Fresh Del Monte Produce's current anti-bribery and corruption policies have not been comprehensively reviewed against the latest guidance issued by the UK Serious Fraud Office, SFO, in the past 3 years. Which of the following approaches best ensures ongoing regulatory compliance and mitigates potential risks for the company? Option A. Wait for any reported incidents or enforcement actions related to bribery and corruption to prompt a review of Fresh Del Monte Produce's existing policies. Option B. Prioritize cost-saving measures by deferring a comprehensive policy review until a specific regulatory mandate or significant external event necessitates it for Fresh Del Monte Produce. Option C. Conduct a thorough review and update of Fresh Del Monte Produce's anti-bribery and corruption policies and procedures to align with the most recent UK Bribery Act 2010 guidance and SFO recommendations. Option D. Assume that the current policies remain adequate for Fresh Del Monte Produce due to their historical effectiveness and the absence of recent internal breaches. The correct answer is C. Conduct a thorough review and update of Fresh Del Monte Produce's anti-bribery and corruption policies and procedures to align with the most recent UK Bribery Act 2010 guidance and SFO recommendations. Explanation. Scenario analysis. This scenario presents a challenge for Fresh Del Monte Produce's compliance team by requiring them to navigate potential conflicts between internal policies and evolving regulatory expectations. The difficulty lies in proactively identifying and addressing these gaps before they lead to noncompliance, which could result in reputational damage, financial penalties, and operational disruptions. The team must exercise careful judgment to balance the need for robust compliance with the practicalities of implementing new procedures. Correct approach analysis. The correct approach involves a proactive and systematic review of Fresh Del Monte Produce's existing anti-bribery and corruption policies against the latest guidance from relevant regulatory bodies. This ensures that the company's internal controls remain current and effective in mitigating risks. Specifically, aligning policies with the UK Bribery Act 2010 and associated guidance from the Serious Fraud Office, SFO, is crucial. This approach demonstrates a commitment to ethical conduct and regulatory adherence, preventing potential violations by anticipating and addressing emerging compliance requirements. Incorrect approaches analysis. An approach that relies solely on responding to reported incidents or enforcement actions by regulatory bodies is reactive and insufficient. This fails to meet the preventative obligations inherent in regulatory frameworks like the UK Bribery Act, which emphasizes the importance of adequate procedures to prevent bribery. Such an approach risks significant noncompliance and associated penalties. Another incorrect approach is to assume that existing policies are automatically compliant simply because they were adequate in the past. Regulatory landscapes and enforcement priorities evolve. Without regular review and updates, policies can become outdated, leaving Fresh Del Monte Produce vulnerable to noncompliance. This demonstrates a lack of due diligence and a failure to adapt to changing compliance standards. Finally, an approach that prioritizes cost saving over comprehensive policy review would be detrimental. While efficiency is important, compromising on the thoroughness of compliance reviews can lead to much larger financial and reputational costs if noncompliance is discovered. Regulatory compliance is an investment, not merely an expense. Professional reasoning. Professionals at Fresh Del Monte Produce should adopt a risk-based, proactive compliance framework. This involves 1. Staying informed about regulatory changes and enforcement trends relevant to their operations. 2. Regularly assessing the effectiveness of existing compliance programs against these changes and identified risks. 3. Implementing necessary updates to policies, procedures, and training in a timely manner. 4. Fostering a culture of compliance where employees are encouraged to report concerns and where ethical conduct is paramount. Question 10. The performance metrics show a significant increase in revenue for Fresh Del Monte Produce in the last quarter, but also a concerning rise in operational costs. In preparing the quarterly report for investors, what is the most appropriate regulatory compliance approach to ensure accurate and transparent disclosure? Option A. Present both the revenue growth and the increased operational costs with detailed breakdowns and explanation, ensuring all figures are reconciled with accounting standards and regulatory reporting requirements. Option B. Highlight the revenue growth prominently in the executive summary and provide a brief, generalized explanation for the increased costs, focusing on future cost-saving initiatives. Option C. Focus the report on positive market trends that contributed to revenue growth, while attributing the rise in operational costs to external market factors beyond Fresh Del Monte Produce's control without specific data. Option D. Emphasize the revenue growth as the primary indicator of success and defer detailed discussion of operational costs to a subsequent internal review, citing the need for further analysis. The correct answer is B. Highlight the revenue growth prominently in the executive summary and provide a brief, generalized explanation for the increased costs, focusing on future cost-saving initiatives. Explanation. This scenario presents a professional challenge because Fresh Del Monte Produce, as a publicly traded company, is subject to stringent regulatory oversight regarding its financial reporting and disclosures. The performance metrics, if not accurately and transparently communicated, could mislead investors and stakeholders, potentially leading to regulatory action, reputational damage, and legal liabilities. The core of the challenge lies in balancing the need to present favorable results with the absolute requirement for truthful and complete disclosure, adhering strictly to the applicable regulatory framework. The correct approach involves a thorough review of the performance metrics by the relevant internal departments, e.g., finance, legal, compliance, and external auditors, ensuring that all disclosures are consistent with the established accounting principles and regulatory guidelines. This approach is correct because it prioritizes accuracy, transparency, and compliance. Specifically, it aligns with the principles of fair disclosure mandated by securities regulations, which require that all material information be disclosed in a manner that is not misleading. This proactive verification process mitigates the risk of unintentional misrepresentation and demonstrates a commitment to ethical conduct and regulatory adherence, which are paramount for maintaining investor confidence and avoiding penalties. An incorrect approach would be to selectively highlight positive metrics while downplaying or omitting negative ones without proper context or explanation. This is ethically problematic, as it creates a misleading impression of the company's performance. From a regulatory standpoint, this could be construed as a violation of rules against deceptive practices or omissions of material fact, potentially triggering investigations by regulatory bodies. Another incorrect approach would be to release the performance metrics without adequate internal review or independent verification. This risks the dissemination of inaccurate or incomplete information, which, even if unintentional, can still lead to regulatory scrutiny and legal repercussions. The absence of a robust review process indicates a lack of diligence and a failure to uphold the company's responsibility to provide reliable financial information. A third incorrect approach would be to interpret the performance metrics in a way that is not supported by the underlying data or established accounting standards, solely to present a more favorable narrative. This demonstrates a disregard for factual accuracy and regulatory integrity. Such interpretations can be challenged by regulators and investors, leading to accusations of manipulation and a loss of credibility. The professional decision-making process for similar situations should involve a commitment to transparency and accuracy above all else. Professionals must understand the specific regulatory requirements applicable to their company and industry. They should establish clear internal processes for reviewing and approving all public disclosures, involving relevant subject matter experts. When in doubt about the interpretation or presentation of data, seeking guidance from legal counsel and compliance officers is essential. The ultimate goal should be to provide stakeholders with a true and fair view of the company's performance, thereby upholding ethical standards and regulatory compliance. Question 11. Market research demonstrates that Fresh Del Monte Produce is in the final stages of negotiating a significant acquisition that, if successful, is expected to substantially increase its market share and profitability. The information is currently confidential. Which of the following actions best aligns with regulatory compliance and ethical disclosure practices for Fresh Del Monte Produce? Option A. Issue a press release and file the necessary regulatory disclosures immediately upon reaching a definitive agreement, ensuring broad and simultaneous public access to the information. Option B. Share the details of the impending acquisition with a select group of senior employees to prepare them for the announcement and potential market impact. Option C. Inform key institutional investors and financial analysts about the potential acquisition before it is publicly announced to gauge their reaction and secure their support. Option D. Wait to disclose the information until after the acquisition is finalized and integrated, to present a more complete picture of the company's future prospects. The correct answer is C. Inform key institutional investors and financial analysts about the potential acquisition before it is publicly announced to gauge their reaction and secure their support. Explanation. This scenario presents a professional challenge because Fresh Del Monte Produce, as a publicly traded entity, is subject to stringent regulatory oversight regarding its financial reporting and disclosures. Ensuring compliance with these regulations is paramount to maintaining investor confidence, avoiding legal penalties, and upholding the company's reputation. The core of the challenge lies in balancing the need for timely and accurate information dissemination with the potential for market manipulation or insider trading if information is released prematurely or selectively. The correct approach involves adhering strictly to the established disclosure policies and regulatory requirements for material non-public information. This means that any information that could reasonably be expected to affect the market price of Fresh Del Monte Produce's securities must be disclosed to the public in a manner that ensures broad dissemination and equal access for all investors. This approach is ethically sound and legally mandated, preventing unfair advantages and promoting market integrity. An incorrect approach would be to selectively disclose the information to a select group of analysts or institutional investors before a public announcement. This constitutes selective disclosure, which is a violation of securities laws and regulations designed to prevent insider trading and ensure a level playing field for all investors. Such an action could lead to significant penalties for Fresh Del Monte Produce and its employees, including fines and reputational damage. Another incorrect approach would be to delay the disclosure of the information indefinitely, hoping that the market impact will diminish or that a more favorable narrative can be constructed. This failure to disclose material information in a timely manner can also be a violation of disclosure obligations, as it prevents investors from making informed decisions based on all relevant facts. A third incorrect approach would be to communicate the information through informal channels, such as social media or unofficial company blogs, without a formal press release or regulatory filing. This lack of a controlled and official dissemination method can lead to misinterpretation, speculation, and a failure to reach the entire investing public, thereby undermining the principles of fair disclosure. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves understanding the company's disclosure policies, identifying what constitutes material non-public information, and following the established procedures for its public release. When in doubt, consulting with the legal and compliance departments is crucial to ensure that all actions align with regulatory requirements and ethical standards. Question 12. Process analysis reveals that Fresh Del Monte Produce has identified a significant, non-public development regarding a potential acquisition that could materially impact its stock price. A member of the finance team is aware of this information and is considering whether to purchase additional company stock before the news is officially announced. Which of the following actions best aligns with regulatory compliance and ethical conduct for Fresh Del Monte Produce? Option A. The finance team member shares the acquisition information with a close friend who is also considering investing in Fresh Del Monte Produce stock. Option B. The finance team member purchases company stock immediately, believing it is a prudent investment before the market reacts to the news. Option C. The finance team member proceeds with purchasing company stock, but waits a few days after the initial internal awareness to avoid immediate suspicion. Option D. The finance team member refrains from trading company stock until the acquisition information is publicly disclosed and the company has followed all required disclosure procedures. The correct answer is D. The finance team member refrains from trading company stock until the acquisition information is publicly disclosed and the company has followed all required disclosure procedures. Explanation. This scenario is professionally challenging because it requires Fresh Del Monte Produce to navigate potential conflicts of interest and ensure compliance with internal policies and external regulations designed to maintain market integrity and prevent insider trading. The pressure to act quickly on market-sensitive information, while also adhering to strict disclosure rules, demands careful judgment. The correct approach involves adhering strictly to Fresh Del Monte Produce's established insider trading policy and relevant securities regulations. This means refraining from trading based on material non-public information and ensuring that any necessary disclosures are made through the appropriate channels and at the correct time, as mandated by securities laws. This approach upholds ethical standards, prevents legal repercussions, and maintains investor confidence. An incorrect approach would be to trade on the information before it is publicly disclosed. This constitutes insider trading, a serious violation of securities laws and company policy, leading to severe penalties including fines and imprisonment. Another incorrect approach would be to delay the public announcement of the information beyond what is reasonably necessary for proper disclosure, potentially misleading the market or creating an unfair advantage for certain parties. This also violates regulatory requirements for timely and accurate information dissemination. Finally, attempting to circumvent disclosure rules or selectively sharing the information with a select group would be a breach of fiduciary duty and regulatory obligations. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Identifying material non-public information. 2. Consulting the company's insider trading policy and relevant regulations. 3. Seeking guidance from legal or compliance departments when in doubt. 4. Ensuring all actions are transparent and in accordance with disclosure requirements. Question 13. Process analysis reveals that a fresh Del Monte Produce employee has overheard a conversation detailing a significant, unannounced change in a key supplier's operational capacity that could impact Fresh Del Monte's production timelines. The employee is aware that this information is not yet public. What is the most appropriate course of action for the employee to take regarding this information? Option A. Assume the information is likely already known within the industry and therefore not material, and take no further action. Option B. Immediately report the overheard information to Fresh Del Monte Produce's compliance department. Option C. Share the overheard information on a private online forum for industry professionals to gauge their awareness. Option D. Discuss the overheard information with a close friend who works in investment banking, emphasizing the need for confidentiality. The correct answer is B. Immediately report the overheard information to Fresh Del Monte Produce's compliance department. Explanation. Scenario analysis. This scenario presents a challenge for Fresh Del Monte Produce employees regarding the appropriate handling of potentially material non-public information. The difficulty lies in distinguishing between general industry knowledge and specific, non-public details that could influence investment decisions. Employees must exercise sound judgment to avoid even the appearance of impropriety, which can damage the company's reputation and lead to regulatory scrutiny. Correct approach analysis. The correct approach involves strictly adhering to Fresh Del Monte Produce's internal policies and relevant securities regulations concerning insider trading. This means refraining from discussing or acting upon any information that is not publicly available and could be considered material. Justification is rooted in the fundamental principle of fair markets, which prohibits individuals from profiting from information that is not accessible to the general investing public. This aligns with regulations designed to prevent market manipulation and maintain investor confidence. Incorrect approaches analysis. Disclosing the information to a trusted friend in the financial industry, even with a request for discretion, is an ethical and regulatory failure. This constitutes tipping, which is illegal and can lead to severe penalties for both the tipper and the recipient. It violates the principle of equal access to information. Sharing the information within a private online forum for industry professionals, even if the forum is not publicly accessible, is also problematic. While the audience might be perceived as knowledgeable, the information is still not officially disseminated to the market. This creates a risk of the information spreading further and potentially influencing trading decisions without proper disclosure. Assuming the information is already widely known within the industry and therefore not material is a dangerous assumption. Materiality is determined by whether a reasonable investor would consider the information important in making an investment decision. Unless officially announced, it should be treated as non-public and confidential. Professional reasoning. Professionals at Fresh Del Monte Produce should adopt a cautious approach when dealing with any information that has not been officially released. When in doubt about the materiality or public availability of information, the safest and most ethical course of action is to refrain from discussing it with anyone outside of authorized internal channels and to consult with the company's compliance department. This proactive stance ensures adherence to regulatory requirements and upholds the company's commitment to ethical conduct. Question 14. Process analysis reveals that Fresh Del Monte Produce is considering a new international sourcing agreement that involves complex cross-border logistics and payment structures. Before finalizing this agreement, what is the most critical regulatory compliance step the company must undertake to ensure adherence to its hiring assessment tests, specified jurisdictions, financial reporting, and anti-corruption laws? Option A. Rely on the advice of the international supplier regarding the regulatory compliance of the proposed transaction, assuming their expertise in their local jurisdiction. Option B. Proceed with the agreement based on the assumption that standard international business practices will satisfy regulatory requirements and address any potential issues if they arise post-agreement. Option C. Prioritize the speed of the agreement's finalization to secure the sourcing benefits, deferring detailed regulatory checks until after the initial operational phase. Option D. Conduct a comprehensive legal review of the agreement to identify any potential violations of financial reporting standards and anti-corruption legislation, and consult with internal legal and compliance teams to ensure all disclosure requirements are met. The correct answer is D. Conduct a comprehensive legal review of the agreement to identify any potential violations of financial reporting standards and anti-corruption legislation, and consult with internal legal and compliance teams to ensure all disclosure requirements are met. Explanation. This scenario presents a professional challenge because Fresh Del Monte Produce, as a publicly traded company, operates under stringent regulatory oversight. Ensuring compliance with these regulations is paramount to maintaining investor confidence, avoiding legal penalties, and upholding the company's reputation. The challenge lies in interpreting and applying complex rules to real-world operational decisions, particularly when there might be competing business interests or ambiguities in the regulatory text. Careful judgment is required to balance operational efficiency with the absolute necessity of regulatory adherence. The correct approach involves proactively identifying and addressing potential regulatory gaps or conflicts before they lead to non-compliance. This means establishing robust internal controls, conducting thorough due diligence, and seeking expert advice when necessary. Specifically, for Fresh Del Monte Produce, this would entail a deep understanding of relevant securities laws, financial reporting standards, and any industry-specific regulations that govern its operations. The justification for this approach is rooted in the principle of innocent until proven guilty, which, in a regulatory context, translates to a proactive duty to comply. Failure to do so can result in severe penalties, including fines, sanctions, and reputational damage. An incorrect approach would be to assume that existing practices are compliant without verification. This demonstrates a lack of due diligence and a failure to appreciate the dynamic nature of regulatory frameworks. Another incorrect approach is to prioritize short-term business gains over long-term regulatory stability. This can lead to decisions that, while immediately profitable, expose Fresh Del Monte Produce to significant future risks. A third incorrect approach is to rely on informal or anecdotal interpretations of regulations, rather than consulting official guidance or legal counsel. This can lead to misinterpretations and, ultimately, non-compliance. Professionals at Fresh Del Monte Produce should employ a decision-making framework that begins with a thorough understanding of the applicable regulatory landscape. This involves continuous monitoring of regulatory changes, conducting regular internal audits, and fostering a culture of compliance throughout the organization. When faced with a decision, professionals should ask, does this action align with all relevant laws and guidelines? What are the potential regulatory risks, and how can they be mitigated? Seeking clarification from legal or compliance departments or external experts should be a standard part of the process when any doubt exists. Question 15. Process analysis reveals that during the preparation of Fresh Del Monte Produce's quarterly financial statements, a junior accountant identifies a minor discrepancy in the valuation of inventory. While the discrepancy is not material in isolation, it could, if combined with other potential minor issues, approach materiality. The junior accountant is under pressure to finalize the report quickly. What is the most appropriate course of action for the junior accountant to ensure regulatory compliance for Fresh Del Monte Produce? Option A. Assume the discrepancy is immaterial and proceed with finalizing the report, with a mental note to address it in the next reporting cycle if it becomes more significant. Option B. Focus on completing the report on time and only address the discrepancy if it is explicitly flagged by external auditors. Option C. Immediately report the discrepancy to their supervisor and the accounting department's compliance officer for review and correction, regardless of the perceived materiality or time constraints. Option D. Adjust the inventory valuation based on their best judgment to align with the expected financial performance, without consulting further. The correct answer is C. Immediately report the discrepancy to their supervisor and the accounting department's compliance officer for review and correction, regardless of the perceived materiality or time constraints. Explanation. This scenario is professionally challenging because it requires Fresh Del Monte Produce to navigate potential conflicts between business objectives and regulatory compliance, specifically concerning the accurate reporting of financial information. The pressure to present a favorable financial picture can create an environment where shortcuts or misinterpretations of accounting standards might be considered. Careful judgment is required to ensure that all financial disclosures are not only accurate, but also comply with the relevant regulatory framework. The correct approach involves a thorough and transparent review of all financial data, ensuring adherence to the accounting principles and disclosure requirements mandated by the applicable regulatory framework. This means proactively identifying and rectifying any discrepancies, even if they are minor, and ensuring that all disclosures are complete and not misleading. This approach is ethically sound and legally compliant, safeguarding the company's reputation and avoiding potential penalties. An incorrect approach that involves overlooking minor discrepancies or assuming they will be corrected in future reporting periods is professionally unacceptable. This failure to address issues promptly can lead to the accumulation of errors, potentially resulting in material misstatements in financial reports. Such an oversight violates the principle of accurate financial reporting and can expose fresh Del Monte produce to regulatory scrutiny and sanctions. Another incorrect approach that involves selectively disclosing information to present a more favorable financial position, while omitting or downplaying negative aspects, is also professionally unacceptable. This constitutes a misleading representation of the company's financial health, which is a direct violation of regulatory disclosure obligations and ethical standards. Transparency and completeness are paramount in financial reporting. A professional decision-making process for similar situations should involve a commitment to integrity and accuracy. When faced with potential financial reporting issues, professionals should 1. Understand the relevant regulatory requirements thoroughly. 2. Conduct a comprehensive review of all data. 3. Consult with internal or external experts if there is any uncertainty. 4. Prioritize accuracy and completeness over expediency or the desire for a favorable presentation. 5. Document all decisions and the rationale behind them. 6. Escalate significant issues to appropriate levels of management or oversight. Question 16. Risk assessment procedures indicate that a potential new supplier for fresh Del Monte produce has been flagged for potential violations of labor laws in their primary operating country. What is the most appropriate initial step for fresh Del Monte produce to take? Option A. Proceed with the partnership as planned, assuming the allegations are unsubstantiated. Option B. Inform regulatory bodies of the allegations without first investigating or contacting the supplier. Option C. Initiate a thorough, documented investigation into the allegations and engage with the potential supplier to understand and address any confirmed issues. Option D. Immediately cease all discussions with the potential supplier and seek an alternative. The correct answer is D. Immediately cease all discussions with the potential supplier and seek an alternative. Explanation. This scenario presents a professional challenge because it requires an employee of fresh Del Monte produce to navigate a situation where a potential business partner's practices may not align with the company's ethical and regulatory commitments, specifically concerning labor standards. The challenge lies in balancing the pursuit of business opportunities with the imperative to uphold compliance and ethical conduct, avoiding reputational damage and legal repercussions. Careful judgment is required to assess the severity of the potential noncompliance and determine the appropriate course of action without prematurely jeopardizing a valuable relationship or, conversely, overlooking serious ethical breaches. The correct approach involves a thorough, documented investigation into the allegations and a proactive engagement with the potential partner to understand and rectify any identified issues. This aligns with the principles of due diligence and responsible business conduct expected under regulatory frameworks that emphasize supply chain integrity and ethical sourcing. Specifically, it reflects a commitment to understanding and mitigating risks associated with labor practices, which can have significant legal and reputational consequences. By seeking clarification and offering support for remediation, fresh Del Monte produce demonstrates a commitment to compliance and ethical partnership, rather than outright rejection based on unverified claims. This approach allows for informed decision-making and preserves the possibility of a compliant and ethical business relationship. An incorrect approach that involves immediately terminating discussions without further inquiry fails to uphold the principle of due diligence. It assumes the allegations are definitively true and ignores the possibility of misunderstanding or the partner's willingness to address concerns. This could lead to missed business opportunities and potentially unfounded accusations. Another incorrect approach, which is to proceed with the partnership while ignoring the allegations, represents a severe regulatory and ethical failure. This would expose fresh Del Monte produce to significant risks, including association with unethical labor practices, potential legal penalties for complicity or negligence, and severe reputational damage. It demonstrates a disregard for compliance obligations and ethical standards. Professionals should employ a structured decision-making process when faced with such situations. This involves 1. Acknowledging and documenting the reported concern. 2. Initiating a fact-finding process to gather objective information and assess the credibility and scope of the allegations. 3. Evaluating the potential risks and impacts on fresh Del Monte produce, considering legal, reputational, and operational factors. 4. Engaging with the relevant parties, including the potential partner, to seek clarification and explore solutions. 5. Making a decision based on the gathered evidence and risk assessment, which may range from proceeding with caution and implementing oversight to pausing or terminating discussions, depending on the severity and resolvability of the issues. Question 17. The evaluation methodology shows that Fresh Del Monte Produce is preparing to release its quarterly earnings report. During the final review, a discrepancy is identified in the revenue recognition for a significant international contract. The finance team has differing interpretations of the applicable accounting standards and their impact on the reported revenue. What is the most appropriate course of action for Fresh Del Monte Produce to ensure regulatory compliance and ethical reporting? Option A. Immediately halt the public release of the earnings report. Conduct a thorough investigation into the revenue recognition discrepancy with the involvement of internal legal and accounting experts, and potentially engage external auditors or legal counsel to ensure accurate reporting before any announcement. Option B. Issue a preliminary earnings announcement that is intentionally vague about the revenue figures, citing ongoing internal reviews to avoid making a definitive statement on the disputed item. Option C. Delay the public release of the earnings report indefinitely until the discrepancy is fully resolved, without providing any interim communication to the market. Option D. Proceed with the public release of the earnings report as scheduled, with a note indicating a potential future adjustment if the discrepancy is confirmed. The correct answer is D. Proceed with the public release of the earnings report as scheduled, with a note indicating a potential future adjustment if the discrepancy is confirmed. Explanation. This scenario presents a professional challenge because Fresh Del Monte Produce, as a publicly traded company, is subject to stringent regulatory oversight regarding its financial reporting and disclosure practices. Ensuring compliance with these regulations is paramount to maintaining investor confidence, market integrity, and avoiding severe legal and financial penalties. The core of the challenge lies in balancing the need for timely information dissemination with the absolute requirement for accuracy and adherence to established accounting principles and disclosure rules. Misinterpreting or misapplying these rules can lead to material misstatements, which have significant consequences. The correct approach involves a thorough review of the financial data against the applicable accounting standards and regulatory requirements, seeking clarification from internal legal and compliance departments, and potentially engaging external auditors or legal counsel for expert opinion before any public announcement. This approach is correct because it prioritizes accuracy and compliance. Specifically, under U.S. federal securities laws and accounting principles, e.g., Generally Accepted Accounting Principles (GAAP), companies have a duty to ensure that all public disclosures are accurate and not misleading. The Securities and Exchange Commission (SEC) enforces these rules, and any material misstatement can result in investigations, fines, and shareholder lawsuits. Consulting with internal experts and external advisors ensures that the interpretation of complex regulations is sound, and that the financial reporting aligns with legal and ethical obligations. An incorrect approach of proceeding with the announcement based on preliminary, unverified data would be a significant regulatory and ethical failure. It bypasses the essential due diligence required to confirm the accuracy of financial information before it is released to the public. Such an action could be construed as a violation of anti-fraud provisions of securities laws, as it risks disseminating misleading information to investors. Another incorrect approach of delaying the announcement indefinitely without a clear plan to verify the data and make a timely disclosure would also be problematic. While accuracy is key, unreasonable delays in disclosing material information can also be viewed negatively by regulators and investors, potentially suggesting an attempt to manipulate market perception or hide unfavorable news. This could violate rules requiring timely disclosure of material events. Finally, an incorrect approach of making a vague or overly cautious announcement that omits key details due to uncertainty, without further clarification or a commitment to provide updated information, would also be a failure. While avoiding definitive statements might seem prudent, it can still be misleading if it creates an incomplete or inaccurate picture for investors. The professional reasoning framework for such situations involves a systematic process. First, identify the potential regulatory implications of the situation. Second, gather all relevant facts and data. Third, consult with internal subject matter experts, e.g., legal, compliance, finance. Fourth, if necessary, seek external expert advice. Fifth, evaluate the information against applicable laws, regulations, and ethical standards. And finally, make a decision that prioritizes compliance, accuracy, and transparency. Question 18. Process analysis reveals that a fresh Del Monte Produce executive, while reviewing preliminary financial reports, identifies a significant, unannounced positive development that is highly likely to impact the company's stock price. The executive is considering purchasing additional shares of fresh Del Monte Produce stock before this information becomes public. What is the most appropriate course of action for the executive to ensure regulatory compliance and uphold ethical standards? Option A. Discuss the preliminary findings with a close friend who is also a financial advisor to get their opinion on the potential stock movement before deciding whether to trade. Option B. Wait for the official public announcement of the development and then consider purchasing shares, but only after a reasonable period has passed to avoid any appearance of impropriety. Option C. Proceed with purchasing additional shares of fresh Del Monte Produce stock, as the information appears certain to benefit the company and the executive is confident in their assessment. Option D. Immediately report the preliminary findings and the potential impact to the company's chief compliance officer or legal department for assessment and guidance before taking any further action, including trading. Correct answer is D. Immediately report the preliminary findings and the potential impact to the company's chief compliance officer or legal department for assessment and guidance before taking any further action, including trading. Explanation. This scenario is professionally challenging because it requires fresh Del Monte Produce to navigate potential conflicts of interest and ensure compliance with regulatory requirements regarding insider trading and disclosure. The pressure to act quickly on market-sensitive information, while also upholding ethical standards and legal obligations, demands careful judgment. The correct approach involves a structured internal review process that prioritizes regulatory compliance and ethical conduct. This includes immediately escalating the information to the designated compliance officer or legal department for assessment. This approach is correct because it adheres to the principles of good corporate governance and the regulatory framework governing publicly traded companies, which mandates timely and accurate disclosure of material non-public information and prohibits insider trading. By involving the compliance and legal teams, Fresh Del Monte Produce ensures that any decision to trade or disclose is made in accordance with applicable securities laws and internal policies, thereby mitigating legal and reputational risks. An incorrect approach would be to proceed with the trade based on the perceived certainty of the information without formal verification or consultation. This is a regulatory and ethical failure because it bypasses established compliance procedures designed to prevent insider trading. Acting on material non-public information before it is officially disclosed to the market constitutes illegal insider trading, exposing both the individual and the company to severe penalties, including fines and reputational damage. Another incorrect approach would be to share the information with a trusted colleague outside of the designated compliance channels for their opinion before reporting it. This is also a regulatory and ethical failure, as it risks further dissemination of material non-public information, potentially leading to a wider circle of individuals engaging in or being privy to insider trading. It undermines the integrity of the information control process and increases the likelihood of regulatory breaches. Professionals should adopt a decision-making framework that emphasizes a seek first to understand, then to be understood approach when dealing with potentially sensitive information. This involves a commitment to transparency, adherence to established protocols, and a proactive engagement with compliance and legal departments. When faced with information that could be material and non-public, the immediate and primary action should be to report it through the designated channels, allowing trained professionals to assess its implications and guide the appropriate course of action. This systematic process ensures that decisions are not driven by personal interpretation or expediency, but by a robust framework of regulatory compliance and ethical responsibility. Question 19. Process analysis reveals that a fresh Del Monte Produce employee is involved in a discussion with a former colleague who now works for a supplier. During this conversation, the employee is tempted to share insights about upcoming product development initiatives and potential market expansion plans for fresh Del Monte Produce. Which of the following approaches best adheres to regulatory compliance and ethical conduct for fresh Del Monte Produce employees? Option A. Decline to share specific details about upcoming product development initiatives and market expansion plans, and instead offer to discuss general industry trends or operational efficiencies that do not reveal fresh Del Monte Produce's proprietary strategies. Option B. Discuss the upcoming product development initiatives and market expansion plans with the former colleague, as this fosters good supplier relationships. Option C. Assume that any information shared in an informal conversation with a former colleague is not subject to confidentiality restrictions. Option D. Share the information freely, as the former colleague is a trusted contact and the discussion is informal. The correct answer is D. Share the information freely, as the former colleague is a trusted contact and the discussion is informal. Explanation. Scenario analysis. This scenario presents a challenge for fresh Del Monte Produce employees regarding the appropriate handling of potentially sensitive information. The core difficulty lies in balancing the need for internal communication and collaboration with the imperative to protect confidential business strategies from unauthorized disclosure. Employees must exercise sound judgment to discern what constitutes appropriate internal discussion versus what could be construed as a breach of confidentiality, especially when interacting with external parties who may have indirect connections to the company. Correct approach analysis. The correct approach involves exercising caution and seeking clarification from appropriate internal channels before sharing any information that could be considered proprietary or strategic. This aligns with general principles of corporate governance and ethical conduct expected of employees in any regulated industry. Specifically, for a company like Fresh Del Monte Produce, adhering to internal policies on information security and confidentiality, which are often informed by broader regulatory expectations around data protection and fair competition, is paramount. This approach prioritizes safeguarding the company's competitive advantage and avoiding any actions that could lead to regulatory scrutiny or legal repercussions. Incorrect approaches analysis. Sharing information freely without considering its sensitivity or potential impact on Fresh Del Monte Produce's competitive position is a significant regulatory and ethical failure. This could lead to the premature disclosure of strategic plans, market insights, or financial data, potentially harming the company's market standing and violating confidentiality agreements. Discussing sensitive business strategies with individuals outside of Fresh Del Monte Produce, even if they are not direct competitors, poses a risk of information leakage. This could inadvertently provide an advantage to other market participants or create reputational damage for the company. It also bypasses established protocols for information dissemination, which are designed to ensure accuracy and control. Assuming that all internal discussions are automatically protected and can be shared externally without consequence is a dangerous misconception. While internal communications are generally privileged, the context and recipient of such information are critical. Sharing internal discussions externally without proper authorization or consideration of confidentiality can still constitute a breach. Professional reasoning. Professionals at Fresh Del Monte Produce should adopt a proactive and cautious approach to information handling. When in doubt about the appropriateness of sharing information, the decision-making process should involve 1. Identifying the nature of the information. Is it strategic, financial, operational, or otherwise sensitive? 2. Considering the audience. Who will receive this information and what is their relationship to Fresh Del Monte Produce? 3. Reviewing internal policies. Are there specific guidelines on information sharing for this type of data or with this type of audience? 4. Seeking guidance. If uncertainty remains, consult with a supervisor, legal counsel, or the compliance department. This structured approach ensures that decisions are made in alignment with regulatory requirements and ethical standards, protecting both the individual employee and Fresh Del Monte Produce. Question 20. Governance review demonstrates a recurring discrepancy in the data reporting mechanism used by Fresh Del Monte Produce's logistics department concerning shipment volumes to a key U.S. market. While the discrepancy is currently minor and has not yet resulted in a material misstatement, it suggests a potential weakness in data integrity and adherence to reporting standards. What is the most appropriate immediate course of action for the compliance officer? Option A. Immediately cease all data reporting from the logistics department to the U.S. market until the issue can be fully resolved, potentially causing operational disruption. Option B. Initiate a comprehensive internal investigation involving the logistics and IT departments to identify the root cause of the discrepancy, assess its potential impact, and develop a corrective action plan while consulting with legal counsel on reporting obligations. Option C. Instruct the logistics department to manually adjust the reported figures to align with perceived actual shipments, without further investigation or formal documentation. Option D. Advise senior management that the discrepancy is minor and unlikely to cause significant issues, suggesting they monitor it casually without immediate corrective action. The correct answer is B. Initiate a comprehensive internal investigation involving the logistics and IT departments to identify the root cause of the discrepancy, assess its potential impact, and develop a corrective action plan, while consulting with legal counsel on reporting obligations. Explanation: this scenario presents a professional challenge because it requires navigating the delicate balance between operational efficiency and strict adherence to regulatory compliance, specifically concerning data privacy and reporting obligations. Fresh Del Monte Produce, as a global entity, must ensure its internal processes align with the applicable regulatory framework for its operations, which in this case we assume is the U.S. regulatory framework for the purpose of this assessment. The challenge lies in identifying and rectifying a potential gap in data handling that could expose the company to significant legal and reputational risks. Careful judgment is required to select the most appropriate course of action that prioritizes compliance and risk mitigation. The correct approach involves a proactive and thorough investigation into the identified data discrepancy. This entails engaging the relevant internal departments, such as IT and legal, to understand the root cause of the issue and its potential implications. Subsequently, it requires developing and implementing a corrective action plan that not only addresses the immediate problem, but also strengthens internal controls to prevent recurrence. This approach is justified by the U.S. regulatory framework, which mandates robust data protection measures and accurate reporting. For instance, regulations like the Health Insurance Portability and Accountability Act, HIPAA, if applicable to the data in question, or general principles of data integrity and security under various consumer protection laws, emphasize the need for diligent oversight and remediation of data handling practices. Ethical considerations also demand transparency and accountability in data management. An incorrect approach would be to dismiss the finding as a minor operational glitch without further investigation. This failure ignores the potential for the discrepancy to represent a breach of data privacy regulations or a misstatement of material information, which could lead to penalties, fines, and loss of stakeholder trust. Another incorrect approach would be to attempt to rectify the data internally without proper documentation or consultation with legal counsel. This could lead to further compliance issues, as the remediation process itself might not adhere to regulatory standards or could inadvertently create new risks. A third incorrect approach would be to delay reporting the issue to senior management or relevant regulatory bodies if required, thereby compounding the initial oversight with a failure to disclose, which is often a more serious offense. The professional decision-making process for similar situations should involve a systematic risk assessment. Upon identifying a potential compliance issue, professionals should first gather all available information to understand the scope and nature of the problem. This should be followed by consulting relevant internal policies and external regulations. Engaging with legal and compliance departments is crucial to interpret regulatory requirements and assess legal exposure. Developing a clear, documented plan for remediation and prevention, and ensuring its effective implementation, is paramount. Finally, maintaining open communication with stakeholders and regulatory bodies, as appropriate, demonstrates a commitment to transparency and good governance.